Good day, Junior Tickies. We're going to look now at Activity 6. Complete the T accounts of each of the transactions to show which account is debited and which account will be credited. Classify each business account as an asset, owner's equity, income, expense, or liability. Example. Took out a loan from Absa Bank for 200,000. So which two accounts is involved? Number one, if the business receives money, then bank will always be involved. Why did the business receive money? Because we borrowed money from Absa. So this means we need to open up loan. Bank, because we have a favorable bank balance, is classified as an asset, and loan is a liability. This means that our assets will increase on the debit side, bank is debited, and liabilities will increase. The second part of this question is we need to indicate the influence that each of the transaction will have on the accounting equation. Use the table provided to record your answer. So you need to identify then which account is debited, which account is credited, what is the effect on your assets, owner's equity, and liabilities. So we use the T accounts as a tool in order for us to know but which account is debited and which account is credited. Then we classify each account so that we can know if our assets will increase or decrease, and the same as with owner's equity and liabilities. We are now going to complete each transaction by answering actually question 1 and question 2. So number 1, transaction number 1, the owner deposited a further 120,000 in the business account to increase his capital contribution. So we need to identify which two accounts is involved. If the business receives money, then bank will be involved. Why did the business receive money? Because of capital contribution, but we don't show it as capital contribution. It will be shown only as capital. Bank is regarded as an asset which will increase on the debit side and decrease on the credit side. Remember to use dead click if you are not sure where's the plus and where's the minus. This is something that you have to study. Capital is regarded as an owner's equity account, which means minus on the debit and plus on the credit side. If the business receives money, bank will always be debited, account credited, capital. The second part of this question is identifying the account debited, account credited, assets, owner's equity, liabilities. As you can see, bank is debited, account credited, capital, assets plus 120,000, owner's equity plus 120,000. Can you see how the T account assists you in completing the accounting equation? Transaction number 2, paid the manager's monthly earnings, 29,000. The two accounts involved is bank and salaries. When we make payments, bank will always be involved. When business receives money, bank will always be involved. Can you see that bank can be used as a basis to work from? Because now you should know, bank is classified as an asset, plus minus, salaries is an expense plus minus. But we need to show what effect it will have on the owner's equity. So if the business makes a payment, bank is always credited. Now we just apply the double entry principle. Every credit, there's a debit. On the accounting equation, account debited, salaries, account credited, bank. What happened with my assets? It decreased with 29,000. Because my expense increased with 29,000, this will have a negative effect on the owner's equity, and nothing happened with my liabilities. The third transaction, paid the owner's daughter's swimming lessons, 500. So this is a personal expense. If we make a payment, bank will always be involved. And because this is a personal expense, it means we need to open up drawings. Bank is regarded as an asset which will increase on the debit side and decrease on the credit side. Drawings is a direct owner's equity account minus on the debit side plus on the credit side. So if the business made a payment, it means bank is credited the rest is debited. On my accounting equation, account debited, drawings. Account credited, bank. Assets minus 500, owner's equity minus 500. Nothing happened with your liabilities. Transaction number 4. Paid 140,000 for deposit on a new property. This means that we've made a payment, and if we make a payment, bank will always be involved. Now we need to identify for what reason did we make a payment. So we've purchased a new property. This will be shown as land and buildings. Both is classified as an asset, which means it will increase on the debit side and decrease on the credit side. If money goes out of our bank account, bank is credited. It means that your assets will decrease. For every credit, there's a debit. We apply the double entry principle. So the second part of the question, showing this on the accounting equation in the table format, account debited, land and buildings, account credited, bank, assets will be plus minus 140,000. Remember, the instruction said you need to write the figure as well. You cannot just write plus or minus. Nothing happened with owner's equity. Nothing happened with my liabilities. Transaction number 5. The business renders services and receives cash 48,900. If the business received money, it means bank is involved. Why did the business receive money? Because of services rendered. We don't show it as services rendered, we show it as fee income, or another word that we can use is current income. Bank is regarded as an asset which will increase on the debit side and decrease on the credit side. Fee income is regarded or classified as an income minus debit plus credit, and we need to show what will be the effect on the owner's equity. If the business receives money, bank is always debited. It means that fee income will be credited. So in our table, account debited, bank, account credited, fee income, assets plus 48,900, owner's equity plus 48,900. Please take note that you can study this, knowing that bank is debited when the business receives money, bank is credited when the business makes a payment. Then we just apply the double entry principle. Or you can use the T account as a tool. If you know that bank that we've debited, your assets increase, then you know fee income is an income, your income will increase on the credit side. Did anything happen with my liabilities? No. We have to write a 0. Transaction number 6. Received 5,800 from tenant for rent. This means that the business received money. Bank is involved. Why did the business receive money? Because of rent income. Bank is regarded as an asset, rent income, but we need to show the effect on the owner's equity. When the business receives money, bank will be debited, account credited, rent income. Our income will increase on the credit side. On our table, account debited, bank. Account credited, rent income. Assets plus 5,800. Because my income increased, it will have a positive effect on the owner's equity. Nothing happened with your liabilities. Transaction number 7. Paid 1,650 for repairs on a delivery van. Just because you see the word delivery van doesn't mean that we've purchased a new vehicle. So we often get confused with this. It says that repairs was done on that delivery van. This means that a payment was made, bank is involved. Why? Because repairs was done to the delivery van. Bank is regarded as an asset and repairs as an expense. And we need to know what is the effect on the owner's equity. When a payment is made, bank will be credited, which means your assets will decrease and our expense will increase on the debit side, but what effect does it have on the owner's equity? A negative effect. So account debited, repairs. Account credited, bank. Assets minus 1,650. Because our expense increase, it has a negative effect on the owner's equity, minus 1,650. Liabilities, 0. Transaction number 8. Paid the telephone account, 870. If we make a payment, it means bank is involved. Please take note, I use bank as a base to work from. Why did we make a payment from our bank account? Because we paid our telephone account. That means we need to open up telephone. Bank is regarded as an asset and telephone as an expense. So again, make sure that you understand your theory. Because if you don't understand it, then you're going to find the application of that very difficult. Remember, on our accounting equation, we need to identify the effect that our expenses will have on our owner's equity. So bank is credited, our assets will decrease. Because telephone is debited, our expense increase, it will have a negative effect on the owner's equity. So in our table, we're going to say account debited, telephone, account credited, bank. Assets minus 870. Because our expense increase, it will have a negative effect on the owner's equity, minus 870. Liabilities, 0. Transaction number 9. Paid 885 for new stationery. If a payment is made, bank is involved. Why did we make a payment? Because we purchased stationery. Bank is regarded as an asset and stationery as an expense, classified as an expense. And we need to show the effect it will have on the owner's equity. When a payment is made, bank is always credited. For every credit, there is a debit. On our table, account debited, stationery. Account credited, bank. Assets minus 885. Because our expense increased, it will have a negative effect on the owner's equity. Did anything happen with my liabilities? No. Transaction number 10. Paid 2,500 for insurance. 1,000 is for the owner's personal home insurance. So this means that the business, from the business bank account, they've paid 2,500. But they paid for the business insurance and for the owner's personal insurance. So when we have this type of transaction, it's always better to split them up in two, especially when we do it on the accounting equation. We're first going to start with that the owner's personal insurance. It means that money came from our bank account. What did we pay? We paid for insurance. Money came from our bank account because we paid for the owner's personal insurance. And anything taken for personal reasons must be shown as drawings. Bank is classified as an asset, insurance an expense, but we need to know the effect on the owner's equity. Drawings will affect the owner's equity. This means, let's start with the first one. 2,500 minus 1,000 means that 1,500 was paid towards the business insurance. That is a business expense. Bank will be credited and the insurance account will be debited. To show this on the accounting equation, we're going to say account debited, insurance, account credited, bank, assets minus 1,500. Because my expense increased, it will have a negative effect on the owner's equity, minus 1,500. Nothing happened with your liabilities. The second part of this, account credited, bank. If the business makes a payment, bank is always credited. Account debited, drawings. This means on my accounting equation in the table, we're going to start with the account debit, drawings, account credit or credited, bank, minus 1,000 assets, owner's equity minus 1,000. Remember, it's better to show them separately as showing them together on the accounting equation. Anything happen with my liabilities? Nothing. Transaction 11, bought a new cash register for 5,400. So the first thing that you need to identify, we bought something, which means bank is involved. What did we purchase? We purchased a cash register. Reminder, a cash register will form part of our equipment, but the money that we put into the cash register will be our cash float, and that is to be able for us to give our customers change. Both is regarded as an asset, which means it will increase on the debit side and decrease on the credit side. So if we're using bank as a base to work from, when a payment is made, bank is always credited. It means that equipment is going to be debited. So in our table, account debited, equipment, account credited, bank, assets plus minus 5,400. Nothing happened with my owner's equity, nothing with my liabilities. Transaction number 12, paid back 1,600 on the loan from Absa Bank. So when we make a payment, bank is involved. What payment did we make? We paid back the loan, and we have to be specific by writing the name of the financial institution. In other words, where did we borrow the money from? Bank is regarded as an asset, which will increase on the debit side and decrease on the credit side. Loan, a liability, minus debit plus the credit side. So if money goes out of our bank account, bank is credited, account debited, loan. On our table, we're going to say account debit, loan, Absa Bank. Account credit, bank. Assets, minus 1,600, and our liabilities is going to be minus 1,600, which means nothing happened with my owner's equity. The next part of this question says now, this is the last question. The business made a profit of 20,795. Do a calculation to prove the net profit. In other words, they gave you what is the net profit, but you need to show, is that correct by doing a calculation? So when we need to find out our net profit, it means we need to look at all our income and all our expenses. So starting off with totaling our total assets, owner's equity and liabilities, it means our total assets is 337,695. Owner's equity, 139,295, and our liabilities, 198,400. Assets must equal owner's equity plus liabilities. So when we now need to find out our net profit, it means by looking at all of our income, we are going to say fee income, 48,900, and then we had rent income, 5,800. Our expenses, salaries, 29,000, repairs, 1,650, telephone, 870, stationery, 885. So we need to identify from what we've completed all our income and all our expenses. Insurance, 1,500. If I add my total income minus my total expenses, it will prove our net profit, which was 20,795. There is an alternative way in getting to exactly the same answer by only looking at our owner's equity. Remember that owner's equity is capital plus net profit minus our drawings. So if we take our capital, if there were any capital, we take our capital and we take our drawings, and then we look at all our income and our expenses. But that's just a longer way in getting to exactly the same answer, which was by simply taking our income minus our expenses. Thank you very much. We are now done with chapter 1. And chapter 1, a reminder, it focused on the accounting theory, and that forms the basis for you to be able to do accounting. If you do not understand the basics in accounting, then applying it moving forward is going to be challenging. So every single time, refer back to your accounting theory booklet and make sure that is the work that you need to study so that you will be able to apply it. I want to leave you with this quote: if you believe in yourself, anything is possible. Have a wonderful day.